Hello and welcome. I'm Ava, and you're watching Ava Talks Crypto, your #1 resource for accurate and up-to-date information on everything happening in the crypto world. For today's top stories, Binance alleges that SEC Chair Gary Gensler offered to serve as advisor to the crypto company in 2019. Analysts agree that SEC's crypto crackdown may not affect traders in the near term but could potentially transform the industry. First-time crypto investors in the UK will be offered a cooling-off period under new rules. For our first-time viewers, Ava Talks Crypto is a channel dedicated to providing all the latest and hottest news happening in the crypto space. We cover everything that affects the crypto world and more. We also have daily market videos that contain in-depth analysis of the crypto market to help you strategize your crypto trades. Our daily market report videos cover analysis on Bitcoin, Ethereum, and trending altcoins. Before we begin, please support our channel by giving this video a like and subscribing. Doing these simple things goes a long way, and it also encourages us to make more quality videos. To be among the first to watch our videos, hit that bell icon to get notified whenever new videos are uploaded. You can also share our videos with your friends who may be interested. Also, you can leave comments to let us know what you think. Now, on to our headlines. Let's start by taking a look at a story that's making headlines across the crypto world. SEC Chair Gary Gensler is at the center of the recent crackdown on crypto companies. However, Binance lawyers allege that the SEC chair offered to serve as an advisor to Binance's parent company in 2019. In the documents filed by the SEC on Wednesday, two of Binance's law firms, Gibson Dunn & Latham & Wilkins, alleged that Gensler offered to serve as an advisor for the crypto exchange in several conversations that happened back in March 2019. The allegations say that Gensler had talks with Binance executives and the founder himself, Changpeng Zhao. Gensler eventually met Zhao in Japan for lunch later that month. During that time, Gensler was teaching at the Massachusetts Institute of Technology's Sloan School of Management. In 2021, President Biden appointed him to be the SEC's head, and that was when the crypto crackdown started. Under Gensler's leadership, the SEC was involved in a string of lawsuits and sued numerous crypto firms for allegedly selling unregistered securities. Earlier this week, the SEC filed 13 charges against Binance and Zhao. The lawsuit alleges that the company failed to register as an exchange and broker-dealer, lacked critical controls over its business, and improperly commingled funds. Binance lawyers alleged that before Gensler started going after Binance, he was trying to cozy up to the company by offering his services as an advisor. In a previous report from the Wall Street Journal, it cited Gensler and Binance's relationship. The report suggested that Binance approached Gensler. In the latest filings, Binance lawyers stated that Zhao continued to stay in touch with Gensler after the March meeting. At the time, Zhao sat down for an interview with Gensler as part of the cryptocurrency course that Gensler was teaching at MIT. According to Binance's lawyers, Zhao understood that Gensler was comfortable serving as an informal advisor. Later in 2019, the letter said that Gensler was slated to testify before the House Financial Services Committee and that he sent a copy of the intended testimony to Zhao before the hearing. In July of that year, Gensler testified before the House over Facebook's proposed cryptocurrency, Libra, and its planned Calibra wallet. These were eventually cancelled. In Gensler's testimony, he stated that he does not advise any financial, technology, blockchain, or other companies, nor does he own cryptocurrencies. Gensler's advice to lawmakers at the time is largely reflected in his public statements today. He stated that with Facebook envisioning a wallet to store customer assets, rules should be in place to guard against potential abuse of customer funds. Because of Gensler's ties with Zhao, Binance lawyers stated that they'd ask for his recusal from any actions regarding the company. An SEC spokesperson said in a statement that SEC Chair Gensler is familiar with and in full compliance with his ethical obligations, including any recusal obligations. Up next, we turn our attention to a developing story. Analysts agree that the SEC's lawsuit against Binance and Coinbase may not have any immediate effects on traders. However, they also stated that the lawsuit may potentially transform the entire industry. Digital tokens are likely to continue to trade as the SEC pushes Binance and Coinbase under tighter federal oversight, which could take years. If successful, it would upend the decentralized sector. The SEC lawsuits are aimed at forcing the two largest crypto exchange platforms in the US to register with federal regulators. The commission alleges that the crypto firms have violated a series of securities laws. By targeting Binance and Coinbase, the SEC is taking its biggest step yet to tighten control over an industry that has largely operated outside the traditional financial system. According to PitchBook crypto analyst Robert Le, he doesn't expect any changes to happen in the short term. Le is referring to the next 3 to 5 years. He also cited the fact that XRP is still continuing to trade despite the SEC's ongoing lawsuit against the blockchain company, Ripple Labs. Despite the lawsuit, crypto investors are still confident in the market. Bitcoin, along with other cryptocurrencies, dropped sharply on Monday, soon after the lawsuits were announced. However, it jumped back up on Tuesday to trade at the $27,000 level. This is still significantly higher than where it traded in late 2022, during what many dubbed the crypto winter. Better Markets President Dennis Kelleher added that the SEC's actions are still sending a loud and clear message to the public. It's also important to note that Kelleher's group is known for calling for more stringent regulations for the crypto industry. Another argument about the lawsuit is that there is no regulatory clarity for digital assets. It was further pointed out that there are 2 regulatory proposals in the House of Congress that are still under debate. However, while the Commission's litigation will take time and potentially fail, the actions this week could put many tokens offered on crypto exchanges in jeopardy. If the SEC moves to identify which tokens on the exchanges are considered securities, the exchanges may have to delist them while they go through the regulation process. Trading disruption is expected, and any of those specific tokens will be hurt. In a previous statement, Gensler hinted that he would be comfortable with fewer cryptocurrencies. In an interview, Gensler stated that people don't need more digital currency. The events this week have spooked casual investors from being more active in trading cryptocurrencies. However, there are also reasons to be optimistic. After a rough year for the industry, an effective effort to bring more regulation to the 2 largest exchanges in the United States can build more credibility in the long run. Blockchain Association CEO Kristen Smith stated that the SEC lawsuits may unite crypto firms. The recent actions by the SEC may drive crypto companies away from the United States, and many are describing the SEC's actions as lazy. According to Le, an effective effort to bring more regulation to the 2 largest exchanges operating in the United States should build more credibility in the long run. If Binance and Coinbase are the first to register under the new regulatory rules, many retail traders will feel safer. Now, we'll bring you an exclusive report on an issue that's been gaining great attention. The UK's new rules on crypto state that first-time crypto investors will be offered a 24-hour cooling-off period. This is part of a wider crackdown on advertising in the industry by the UK's financial regulator. The new regulations mandate that those marketing crypto assets should provide a cooling-off period to first-time investors. The regulator's policy also states that consumers should only invest in crypto assets if they fully understand the risks involved and are prepared to lose all their money. Consumers should not expect protection from the Financial Service Compensation Scheme or the Financial Ombudsman Service if something goes wrong. Also under the new rules, refer-a-friend bonuses, which crypto firms use to encourage investors to convince others to invest, will be banned. Firms promoting crypto assets must also put in place clear risk warnings and ensure advertisements are clear, fair, and not misleading. The new rules were put in place to protect consumers from the potential of losing all their money on crypto. Crypto remains largely unregulated and high risk, the UK regulatory agency added. That's all we have for you today. Don't forget to check out our daily market report videos for a comprehensive and in-depth look at the crypto market. Again, this is Ava from Ava Talks Crypto. Have a great day.